Hey there, I'm Lisa. I'm one of the founding faculty members here at Auro EDU, and I'll be your go-to person for all things commerce in Class 10th. Now, I'm not your average teacher. I'm more like a mentor, a guide, and maybe even a friend. My job is to show you how commerce isn't just something you learn in a textbook. It's a tool for shaping the future, your future. Welcome to Finance, Futures, and Global Systems. This isn't your typical commerce class. We're going way beyond the usual. We're going to explore things like digital assets, tokenization, and CBDCs, but we'll also dive into exciting topics like the metaverse economy, event management, and how the world of banking and financial services is transforming. You'll also get to understand how tax systems, ESG investing, and investment management shape businesses and societies. And yes, we're going global, looking at how international finance and global taxation impact everything from startups to governments. By the time we're done, you'll not only understand these powerful topics, you'll see them in action and maybe even discover a future career in one of these fields. Whether it's finance, law, entrepreneurship, or digital innovation, the future of commerce is full of possibilities, and you'll be ready to lead it. Let's get started. Hi, my name is Lisa. Welcome to this journey through the future of finance. Today we're diving into a fascinating session titled Digital Assets, Tokenization, and CBDCs, the Future of Money. In this session, we'll discover what digital money really means, how technologies like blockchain are transforming global systems, and what it means for us as future participants in the economy. Let's begin. We'll learn how digital currencies work, why they're important, and what role we play in using them responsibly. It's important because the future of money is already here and affects everything from how we shop to how governments run economies. By the end of this session, you'll have a strong foundation in this digital shift. What are digital assets? Digital assets are valuable things you can't touch but still own, like a photo stored online, a song you've downloaded, or even Bitcoin. They're stored digitally and secured with special technology called cryptography. You can buy, sell, or trade them online. Some digital assets are like money, while others prove ownership of art or data. They're the building blocks of the future economy. Types of digital assets. Not all digital assets are the same. Cryptocurrencies like Bitcoin and Ethereum are one type. NFTs are another. They prove you own something unique, like a digital artwork. There are also digital versions of traditional things, like digital stocks or government bonds. Each of these assets has a different use, but all are stored and traded online securely. Benefits and challenges of digital assets. There are great benefits. Transactions are faster, fees are lower, and you can use them anywhere in the world. But challenges include big price swings and the risk of scams or hacking. Rules are still being created to protect users, and not everyone has the internet or tech needed to join in. It's a powerful tool, but it must be used wisely. Introduction to tokenization. Tokenization is like turning a real object into a digital one. Think of owning a piece of a building, even if you can't afford the whole thing. That's what tokenization allows. It makes big things affordable by dividing them into smaller digital parts. You can invest in a hotel or a car even from your phone. This opens up new opportunities for everyone. Real-world applications of tokenization. Tokenization is being used in real life today. People are buying small parts of buildings, artworks, and even companies. It's also being used in supply chains to track where goods come from. That means you could invest in your favorite band's next album or a sports team's stadium. It's making investment possible for regular people, not just the wealthy. Tokenization versus traditional assets. Traditional assets are usually paper-based, like stock certificates or land deeds. Tokenized assets, on the other hand, are digital and instant. They don't need banks or paperwork. You can trade them anytime, anywhere. This system saves time and money, making finance faster and fairer. What are CBDCs? CBDCs stand for Central Bank Digital Currencies. They are like digital versions of our regular money, issued by the government. Imagine using a digital rupee that's 100% official and safe. They are different from cryptocurrencies because they are backed by central banks. It's like having your bank in your pocket, but safer and smarter. Examples of CBDCs worldwide. Many countries are already trying out CBDCs. China has the digital yuan, and Nigeria launched the naira. India is testing the digital rupee. These are not future ideas. They are happening right now. Governments want to make payments faster and include more people in the economy. CBDCs versus cryptocurrencies. CBDCs are created by governments, while cryptocurrencies are created by networks of users. CBDCs are stable, like regular money. Cryptos can be risky and change value quickly. CBDCs are made for everyday use. Cryptos are often used for investing or tech projects. What is blockchain? Blockchain is the magic behind all these digital tools. It's a digital notebook that no one can change. Every transaction is recorded and locked in. Everyone can see it, but no one can cheat it. This builds trust without needing banks or middlemen. How blockchain works. Think of blockchain as a chain of digital blocks. Each block holds data and links to the one before. Once a block is added, it can't be changed. Everyone in the network checks if the data is real. That's how we keep it honest and secure. Role of smart contracts. Smart contracts are like robots that follow rules. If you agree to pay rent on the first of the month, the smart contract sends it automatically. No humans needed. These contracts are being used in insurance, loans, and even games. They save time and prevent cheating. Advantages of trustless systems. In trustless systems, you don't have to trust people. You trust the code. It's fair and open. There's no one person in charge. This reduces fraud and lets people do business directly. It's safe, transparent, and efficient. Global trends in digital finance. All over the world, digital finance is growing. Fintech is helping people get loans, make payments, and manage money. Young people especially are leading this trend. Governments are supporting it with digital IDs and digital cash. The future is already here, and it's global. Role of big tech and fintech. Big companies like Apple and Google now offer banking services. Fintech startups are giving faster and cheaper options than banks, but this raises concerns about privacy and fairness. We need rules to make sure it's safe and equal for all users. Financial literacy in the digital era. We need to understand how to use these tools. From mobile wallets to crypto apps, we must learn the basics. We also need to know how to avoid scams and make smart choices. This is not just about money. It's about making good decisions in a digital world. Ethical issues in digital finance. There are ethical questions we must ask. How is our data used? Is everyone being treated fairly? And who's responsible if something goes wrong? These are big issues, and we must think critically about them. Technology must serve people, not control them. Responsibilities as a digital consumer. We must be smart and safe online. Use strong passwords, don't share personal info, and check sources. Learn how to spot fake sites or frauds. If something seems wrong, report it. You are not just a user, you are part of the digital economy. Summary and conclusion. In summary, money is going digital, and fast. From blockchain to CBDCs, we are part of a global transformation. The tools we use today will shape the world of tomorrow. Learn them, use them wisely, and always stay informed. The future of money is in your hands.